What's going on, everybody? Welcome back to my YouTube channel. Now, today I'm going to talk to you about how I took this trade, why I took this trade, and how it can benefit you in the long run. Now, one of the main focuses for the concept that I trade is focusing on currency strength and weakness, alignment with the sentiment of the market, and shift of behavior at the same time. And this has really had a massive impact on my trading. It's had a massive impact on hundreds, if not thousands of traders. I constantly get messages daily, emails daily. I witness it for myself on a daily basis with the results that we're seeing in NDS and outside of NDS as well. And I wanted to share this with you because I really think this is going to be beneficial to you. And it really doesn't matter what strategy you're trading. I'm going to share it from the perspective of how I trade, and then you can implement it. Or before you implement it, just take a look at how you could possibly implement it into your own trading itself. Now, I'm currently in a gold trade right now, so I am going to check that at the end and not do too much micromanaging of this trade, and I'll share it with you, win or lose. But without further ado, let's talk about this. So looking at USD CAD here, you can see that we had a nice 2.5 hour win on this trade. We actually went for 2R, but you can see the last 5-minute candle that actually hit the 2.5 hour. So this is the 2R. We had just so much volume come in at such a quick rate that there was just no need to close it. So I went for the 2.5 hour, and we hit profit on this one. Now, in terms of taking this trade, it's pretty simple. I mean, if you look at the structure of the market, you can see we've been heavily bearish for quite some time here. Granted, we have been in a sideways moving market. I'm not too phased about this one, to be honest with you, because if we compare this range to, let's say something like this, maybe that's not even the best example here. Let's say something like, oh goodness, and it's when you want to show it, you can't find it. Something like this. Okay, so let's just take a little snapshot of this, right? Like so. And then let's go back to the beginning here. If I paste that, you can see there's a difference, right? There's a lot of close-knit candles on the 5-minute time frame. They're really tight. They look congested. And we're not really getting a directional bias. Here you can see they're a little bit more spread out. And then granted, we did have just before the close here. So this is 10 minutes before the new 6 a.m. candle. So that's pre-London, Frankfurt pre-London candle. So the new 4H candle open. We kind of had a breakout, but listen, that is so relevant. Don't let me try and make you believe what I'm trying to say here in that sense. It just is not as congested as a consolidation would usually be. So anyway, looking at this here, we have a nice downtrend and we have the candle close. So this is where the previous 4H candle closed, right here. And as you can see, the development of the new 4H candle, we had a nice pullback. And if you take a look at this here, you can see that the structure is just staying true to what it is, which is a downtrend. We have a structural high and a low high. And then at this point, we have price pulling back to create a top wick. And this is really what drew me into the trade. The fact that we had a nice pullback, and then it took some time for it to continue down. But what we do notice here is that there was a development in a directional bias, and the sentiment remained true. Because if you see here, price is not breaking the structural high. And in a downtrend, if price is not breaking a lower high or a structural high, then in theory, it is still in a downtrend. And I say theory because it's not fact. It is more often than not, but you can still also lose 6 out of 10 trades. But at the same time, you can still also be profitable losing 6 out of 10 trades if you have good risk to reward. So it all balances itself out. But just before I get quoted in the comment section, because I know that usually comes, just because it's below a lower high doesn't mean it's going to go down, but there's a higher chance that it will. Okay, so we have this information. Now, the way this trade derives is very simple. Previous candle closed bearish, next candle is going to be bearish. And we have price create a top wick, which is the development of a candle formation. So if you think about how a candle is formed, it usually, previous candle closes, the new candle will create a top wick, and then it will usually, this is supposed to be kind of rectangle, will flip bearish, okay? So the development is wick first, body next in anticipation for price to continue down. And the theory is, if the previous candle closes bearish, then technically the only direction that that candle should in fact go is to continue bearish. Why would you think otherwise? Okay, you want to join the moving train, not jump in front of it. Even if it doesn't go down at that moment in time, it doesn't prove this theory wrong. The point is you want to be, what they say, the trend is your friend. Okay, not something that I kind of follow myself, but in that sense, but the candle in itself is a trend. All right, look at this 4H candle. This is where this candle ended, and where did it start? Now I got to do maths. So it started at 2 o'clock, right? So can we say comfortably, let's even, yeah, this will do. Can we say comfortably that this market has been trending down? Granted, it hasn't got too many pullbacks in the first hour or so, but it's trending down. Okay, so that single candle is a trend. And for some people, you're only trading for 1, 2, 3, 4 hours a day, if that. So you don't need to focus on much more than a single candle, right? Anyway, that's not what we're here to talk about. Let me just check what's happening with this. Okay, fine. So previous candle closed bearish. I expect the next candle to be bearish. The development is a wick first, body next, break of the low in line with the trend. If it breaks the low, it makes a new lower low and it continues down. Now that's all important. However, what I want to teach you about today is something that I believe if you incorporate into your trading, you're going to have the best results. And I don't care what concept you're trading. I just believe you'll have the best results. As long as we're talking technical analysis here. Actually, even fundamentals, but let me be careful saying that because I don't really check the fundamentals. But as long as you are focused on this, then it can really help you. So look here. This is on USD CAD, and this is the 2 till 6 candle. So if we go over to Great British Pound USD and we go to the 4H time frame, what we're looking for here is synchronization in the market. That simply means that we're looking for a weakness or a strength to illustrate that there is a directional bias because there are more buyers or sellers at that moment in time supporting that currency. Okay. So here you can see USD CAD is going bearish. Because we have CAD on the right, that technically means CAD is strong. Or if we look at the left, because you have USD on the left and it's not going up, which would indicate USD strong, this indicates USD weakness. Okay. Now, if you look at my crosshairs on the right side, we have British Pound USD. So the consensus that we're getting when we come into the markets is that USD is weak. If that's the case, then pound should be stronger than USD, right? So pound should be stronger than USD. And if that's the case, then this should go bullish at the same time. So look here on the left, the crosshairs are at the same time. The 2 till 4 6 candle closed both in the same direction, illustrating that USD is weak. That's one confluence. Okay, so I already have the groundwork. Previous candles closed bearish on USD CAD. I'm waiting for the next candles to open, create a wick, flip bearish, because that's all I'm ever going to think. But I need to add confluences. And so that confluence, I can see on pound USD that the market is truly illustrated at this moment in time that USD is weak. We can either further that analysis and add more confluence by going to Euro USD on the 4H time frame. And just think about this for a second. The 2 till 6 candle at 4 o'clock. Why do I keep looking at myself? The 2 till 6 4 candle technically should also illustrate USD weakness, right? So we should have a bullish candle at the 2 till 6 close. What do we see here? We see a continued theme in the market that the US dollar is weak. So now can we be a little bit more confident about the idea of selling USD CAD? Well, the answer is yes, right? So where was I? Let's just pop it back here, right? So we could be more confident that selling USD CAD makes sense because we have identified that USD is in fact weak. Now, is that enough? Well, it could be, but for me, I want to see this on a lower scale. So if I go to, so this is the 4H, of course. If I now go to the 1H time frame, what do I see over here? Well, on the 1H time frame, I can see that the last hour of that 4H candle, which was the Asian into the pre-London Frankfurt session, also closed bearish. I'm also anticipating that the next candle will be bearish. But in order for me to want to take this trade in order for me to take this trade with a lot more confidence, as much as I have the confidence that I have, I can now go to the hourly time frame. And what I'm looking for here is at 5 o'clock, I'm looking for a bullish candle close in line with the idea that I can continue to sell USD CAD because we have that sentiment that is continuous throughout the market. So look at my crosshairs. Here at 5 till 6, we have a bullish close indicating USD weakness. And then over here, we have a bearish close also indicating USD weakness. So now I don't just have the 4H, I don't just have Euro USD, USD CAD, and Pound JPY all in alignment. I also have the hourly time frame as well, which means that there wasn't a pullback on the 4H candle to create a bearish close on either of the pairs to say that there is some contingency here. There's consistency. So now I'm even feeling real good about this. I can still lose it, but I'm feeling pretty good about this. Now, is that enough? Well, it could be. But for me, what I want to see here is how the behavior shifts. So if I go to the 5-minute time frame on USD CAD, you can see here that we have a trending market to the downside. So I always want to trade in line with that sentiment. We also have structure on our side, which is a lower high potential continuation. We have a break of the low, which gives me a clear entry technique. We have a clear stop loss placement. And in terms of target, if we go to the 4H time frame, if price breaks down, as far as I'm concerned, there in theory is no traffic until we technically get to around, if I can get there, until we get to around this area. Now, I don't need it to get there, and it's very unlikely that I will hold it to there every single time I take a trade. But for me to get my 2R, is that reasonable? Look where my crosshairs is, right? So this, let's just say I went for the 2.5 bar straight off the bat. Look what I'm asking for from the market when it has this much range back to the downside with no traffic. So is this still a good trade? Yes, it is. It's a beautiful trade, okay? Or trade idea. But is this enough? Well, it could be, but what I want to do is make sure that if I go over to, let's say, Euro USD, and now we go to the 2 till 6 candle close, which is this, and we start with this candle, which is the candle that we started trading on, which was a 6 till 10, 6 till 10. And I go to the 5-minute here, and I look for the close, which is here. What do we see here with the trend? Is that not in alignment with the 5-minute time frame? Of course it is. In terms of the structure, has it not created a higher low, stabilized itself above its previous high? So if it doesn't break the previous low, it's still in an uptrend. It can come back for a double bottom, but it didn't. It's continuing to actually tap the trend line 3 times. And then look at what we see here. At the time of my entry, which is 625, look at the crosshairs on the left on Euro USD. 625, look at the crosshairs on mine. We have also a 5-minute candle that is pushing in the same direction as I want to take the trade, illustrating USD weakness. So we not only have the confluences, we not only have the sentiment, we also have behavior, but we also have at this moment in time, we not only have, but we also have the volume at that moment in time aligned together at the same time. Now, I didn't make this up. So don't shoot the messenger. I'm just telling you what the market does on a daily basis. And because I've identified that from trading for such a long period of time, and slowly but surely over the years, gone from break and retest, breakout to this and that and this and that, I have now been able to, with my experience, with my commitment, with my discipline and patience to learning and continuously growing, have now condensed my whole concept down into not a strategy, but just based on principles of what the market does. And if you go and study this yourself, you will see for yourself that when you take your trades, more often than not, if the market doesn't align, your trades are not going to work out as well. But if it does align, then that is when you're going to get those high probability trades. So that is why I took the sell on USD CAD. It wasn't just because a candle closed bearish and a candle closed bearish. It's because the reason why it will continue or can continue down is because everything aligns. And that's just how the market moves. Okay, that's just how the market moves. I've just explained one trade to you for 16 minutes. How well do you know your trades, guys? How well do you know your trades? That's what I want to ask you. Okay, so I said I was going to share the gold trade with you. This is on the 1 hour, 1 minute, and I probably shouldn't show this to you, to be honest with you, because I don't want to confuse you. But whatever the weather, 26.67.95. Think about what I said, shared with you guys. It's super powerful, super important to just understand that patterns alone are not going to save you. Okay, having too much of a rule-based strategy is not going to save you, but understanding the intricacies of why you are trading, and based on what the market does consistently, you only need to identify one or two things that is going to help you out with your trade, that is going to benefit you in your trading, that you can repeatedly execute on consistently, that will naturally give you consistent results. Okay, think about that. So this is a trade I took. This is what we call a principle-based trade. Stop level. Okay, so my stop loss was above here, not too high. I don't want to lie to you. When I looked at the phone just 2 seconds ago, I was down here and I was targeting the low, to be frank. But as you can see, it done an Uno reversal on me. So here we go. Here's the truth. This is where I managed to get out. It was still good profit. Okay, yeah, here we go. So the profit level was 26.65.73. And unfortunately, this is where I got out of the trade. Too busy making wonderful content for you guys. I mean, it really helps me as well. But at least I got out of the trade. I made some profit on it, and I'm feeling blessed for the profit that I got. As I said, I got into a really nice UCAD trade. And yeah, that's the trade. Why did I take it? Okay, just very quickly, you can see price is failing to break above these structural highs for many times. Okay, you can see it here, 1, 2, 3, 4. If you go back, probably more. Principle-based trade simply means that price cannot break the high or low. So if it doesn't go down, it must go up. You can see price tapped into it once on this hourly candle, and then, oh, that was on the previous hourly candle, but there you go. No, this is on the current hourly candle. Yes, came back, tapped into it again. This was a new hourly candle, and then failed to break. So if it's not going to go up, it must go down. And then I took the sell in expectations that because it's not breaking the high, plus this candle closed bearish, the next candle will be bearish, at least back down to the low, which is the wick rejection area. And then I could at least target this low on the new hourly candle back down to the downside, and it just gets a little bit more TP. But anyway, it done not going to reverse on me. I managed to close out with some profits. That's all that matters. And anyway, I just hope you enjoyed that video. I hope it was beneficial to you. And yeah, let me know your thoughts down below. Until next time, guys, as I always say, continue to trust the process.